Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 11th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Start off with a little bit of economic data. Well, actually, we're starting off with no economic data. We do have the FOMC minutes actually coming out right about now. I'm not going to have really enough time to discern what they are. I can kind of like flip through maybe Twitter and see a couple of bullet points. FOMC, the unduly slow pace is removing policy accommodations, could be costly to the reserve. So unduly slow pace and removing policy accommodations, meaning basically they might need to start increasing interest rates because it could be allowing inflation to kind of run a little bit rampant. So just a couple of things. Another push for a rate hike in 2017 was what some Fed governors feared, that low inflation is here to stay, but push for another rate hike in 2017. Despite the fact that we're seeing low inflation, they want a rate hike there. For the most part, higher prices for gasoline and other items in the aftermath of the hurricanes would likely boost inflation temporarily, and most participants had not assumed enactment of a fiscal stimulus package in their economic projections. So pretty much status as you quote, or status quo, I should say. I'm not seeing a whole lot across the board on anything that would really be market moving necessarily. It's the same thing where we're kind of talking like that. We've got low inflation, but we might need to raise rates. May need to raise rates in 2017, but maybe we're not. So a little bit of ambiguity there. The Fed is supposed to be very transparent, and that's why we're getting that kind of stuff. But the Fed, another headline is increase in interest rates likely to be warranted. Few say no further near-term hikes needed. So there's still a little bit of division is what I'm seeing there. So I'm still on that thought process. We are not going to see an interest rate increase in 2017. So on to the overall markets. We've got crude oil right now just off its highs for the most part, up 33 cents, but you can see tagged that Fibonacci level, the 23 level, and kind of paired away from it slightly, but it is still looking rather bullish in my eyes. I think we're going to be able to break through this Fibonacci level rather easily, maybe come up and test this high here and fill in, I've talked about that, fill in this low volume area within here. So I think that's kind of going to be the mantra in crude oil. Gold futures coming off a little bit, just by about $2 to $3 for the most part, right in the middle of its daily range. Again, came up, kind of tested that value area high, I should say, and which coincidentally lines up with the 50-day moving average. That area kind of being repelled yesterday, but today just very quiet day for the most part in those markets. On the bond futures, they're trending sideways, maybe even slightly up now. They were a little bit lower, but with some of that economic data, or actually the Fed governors talking, we should probably see some of that come out, with the thought process that most of the Fed governors are leaning towards higher interest rates. Still a few that are not, but again, I don't really see this going anywhere anytime soon, and it's right in its comfort zone, so I don't think we're going to see a whole lot of movement there. We've got the VIX coming off a little bit. It looks like it's a positive bar, but right on the lows of the day, and we have busted back below 10 and into the single digits. That being said, onto the overall equities. As you can see, we got the Dow Jones Industrial Average making a new all-time high. A lot of these markets are moving higher right now, with a little bit of that talk that interest rates aren't necessarily, I think the market's looking at it the way I am, interest rates aren't necessarily going to be increasing anytime soon. We got the NASDAQ up again on the day, up by about $8. It's really finding up. We need to have some economic data, I believe, to really get this market moving in either direction, either up or down, depending on what that data tells us. But we also have the E-mini S&Ps up $2 on the day. Let's look at the 30-minute breakdown. You can see we're basically on the highs of the day, just maybe a couple ticks away from that. I think the overall market is just trying to decide which way to go, with not a whole lot of leadership in regards to the fact that there's just not a lot of data out there. We haven't gotten economic data. We haven't gotten the earnings. So the earnings are also going to tell us how the overall economic picture is going to be looking. We haven't seen any of that either. But we will start to see some of that coming out today in the form of earnings. We got I got Facebook up here. I wanted to wait for that to talk about, but we'll talk about Facebook right now. This is a trade that I covered yesterday. I talked about it yesterday. I was looking to cover that trade. Had a working order in there. Finally got filled in it. And what I had on was the October, and I was short the 175 calls, and I defined that in my IRA by buying the 192.5 calls, and I created a big iron butterfly, sold the 150 puts, and was long the 125 puts to create that iron butterfly, the iron butterfly, I should say. And I originally collected a credit of $1.59. Now it should be right around 80 cents. I was working 90 cents for that for a while, but I just didn't want to be in that any closer to the expiration. With volatility starting to expand heading into the binary event that we're seeing here in that next month, I just didn't want to be in and around that, so I decided to get out for that dollar that I talked about yesterday. And in my margin account, if you remember, I did that as a straight strangle, no defined risk on that, did the October 175 calls and the 155 puts. Now you'll notice that both of those short strikes in my IRA and my margin account correspond. That's because in my IRA I tried to set that up like a synthetic strangle, but because it has defined risk, it is officially an iron butterfly. But that's the way I set it up, so it's synthetically like naked strategies, but you can't really do that in an IRA. So I define those risks, and they really crush you on the margin on the put side. So then with that 175, 155 strangle that I did in October for Facebook, I collected originally $1.72 and I got out of it for 95 cents. So out of Facebook, haven't added anything to my portfolio. I'm gearing up for earnings. I'm going to be trying to play some of these earnings that are coming out today after the close. JP Morgan, I believe, is actually tomorrow morning. The 12th. JP Morgan is tomorrow before the open, and so is Citi. I think I'm going to be playing these both to the upside. I'm going to be checking it out. They have really low implied volatility, so not really gung-ho on doing these earnings trades when we have low implied volatility. So follow me on Twitter at Wolfman's blog. I'll be talking about the trades that I implement when and where I do that. So you can follow me at Wolfman's blog, and Friday's webinar is going to be on the butterfly with no upside risk. So that's a really important one, especially in markets that rally. I'll show you how to take advantage of a sideways market, but we'll eliminate the upside risk in case the market continues to move higher. All right, so check that out at Pro Trader Strategies. And if you can't take that, take it easy.